Welcome back to the Crypto Investment and Market video series, short, focused lessons designed to help you understand crypto investing while protecting your assets from mistakes, manipulation, and scams. In crypto, the biggest danger isn't just volatility, it's misinformation. That's why one rule matters more than any other: do your own research. It's not a slogan, it's your first line of defense. Because in a space where anyone can launch a token or make bold claims, knowing how to verify information for yourself is what separates investors from victims. Do your own research means slowing down, checking the facts, and protecting your future before you click, trade, or invest. Real research in crypto isn't about scrolling social media or trusting the loudest voice, it's about building a clear picture from verified facts. That starts with 5 key pillars. First, project fundamentals. Ask, what real problem does this project solve? Does it need blockchain at all, or is it just using buzzwords to sound relevant? Real utility stands on logic, not hype. Second, team transparency. Who's behind it, and can you prove they're real? Strong teams are visible, experienced, and accountable. If you can't verify names, credentials, or past work, walk away. Anonymous teams aren't always bad, but they always raise your risk. Third, tokenomics. How are tokens created and distributed? If a small group controls most of the supply, they control the market, and your potential loss. Healthy tokenomics spread ownership and keep inflation under control. Fourth, community health. A project's community reveals its culture. Are discussions about progress, updates, and development, or just price predictions and hype? Toxic or paid engagement is a red flag. Real communities talk about building, not mooning. And finally, roadmap and delivery. Promises are cheap, execution isn't. Has the team met past milestones? Do updates match what they said they'd deliver? Consistent progress shows reliability, silence or constant delays mean trouble. Together, these pillars form the foundation of smart investing, helping you separate genuine innovation from marketing smoke. Before we continue, if you find this content helpful, please like this video and subscribe. Your support helps us keep spreading free educational resources to make crypto safer for everyone. And remember, this video is for educational purposes only. It's not financial advice. Always do your own research before making investment decisions. Even experienced investors fall into research traps, so let's make sure you don't. These are some of the most common mistakes that turn good intentions into costly lessons. First, relying on influencers. Many are paid to promote projects they barely understand, or don't understand at all. Their enthusiasm is often sponsored. So don't trust opinions, verify every claim. Second, skipping the white paper. It's the blueprint of every project, the one document that explains what the project is, how it works, and why it exists. If you haven't read it, or at least skimmed it, you're investing blind. Take a few minutes to read, not react. Third, ignoring token distribution. Always check who holds the tokens. If a handful of wallets own most of the supply, you're not part of the market, you're part of their exit plan. Unfair tokenomics benefit insiders, not investors. Look for transparent, balanced allocations and avoid projects with massive pre-mines or hidden vesting schedules. Fourth, FOMO investing. Buying because something's trending or everyone's talking about it isn't strategy, it's emotion. Remember, emotions are expensive, and facts are free. Pause, analyze, and wait for confirmed data before you act. If it's real, it'll still be there tomorrow. And finally, neglecting security checks. Even the smartest investor can lose everything by clicking the wrong link. Fake websites, cloned contracts, and phishing DApps are everywhere. Always double-check URLs, contract addresses, and audit reports before you connect your wallet. Because one moment of haste can undo months, or years, of smart investing. When you avoid these 5 traps, you turn do your own research from a slogan into a real security habit, protecting both your portfolio and your peace of mind. This was a short introduction to do your own research. To test what you've learned, visit cryptosafetyfirst.com and take our quick quiz on how to spot red flags and verify projects safely. For deeper learning, explore our companion guides. Practical tools designed to help you protect your assets and invest with confidence. For more free lessons, guides, and educational videos, visit cryptosafetyfirst.com. Stay informed. Stay secure. Stay in control, and help others stay safe too. Thanks for watching.